Good afternoon, everybody. Thank you for joining us. The noonday gun has just gone off in our Cape Town studio where we're based, and it signals the start of our weekly webinar. My name is Neil Peterson. I'm the founder and content-in-chief of Real Estate Investor, South Africa's leading independent real estate content and education platform for more than 16 years. We are really passionate about serving the South African real estate investor, the industry, and the business community through our digital platform, rei.co.za, our monthly digital magazine, Real Estate Investor, and our webinars and in-person events. So welcome to our regular Thursday investment webinar brought to you by Real Estate Investor alongside Blue Titan Investment Group. And I'm delighted to be your host and moderator for today. And the topic for today is mastering investing and financing in new property developments in South Africa, along with our two guests today. And more about that topic and our guests a bit later, who I will introduce to you shortly. First, some housekeeping on recordings. We get this question a lot. There will be a recording of the webinar, which will be made available to all registered attendees after the webinar. And all those people who registered, you will receive it automatically via email, or if you're one of REI's newsletter subscribers, you will receive the recording tomorrow morning. Alternatively, it is fully accessible on the rei.co.za website. Just go to the education tab, you click on event replays, and select your webinar choice for viewing at your leisure. I encourage all of you, our valued audience, to actively participate and interact with us during this webinar. It is an interactive discussion. So if you have any questions for the panel, please don't hesitate to ask. You just submit your questions throughout the webinar to pose to our panelists simply by typing it in the Q&A box, and that's located on the bottom right-hand side of your screen. Not the chat box, that's for general comments. That's for hi, how are you, etc. So that's where you put it into that box. So we'll deal with your questions during the webinar in our Q&A panel discussion, which will come in the final session. So let's move on to the heart of today's discussion, our investment webinar on mastering investing and financing in new property developments in South Africa. And we know that investing in real estate can be both satisfying, lucrative, but it can also be a minefield of challenges, mostly misunderstood. But it really all depends on your investment approach. And whether you're new to investing or looking to expand your portfolio, we've got you covered for today's webinar. And today we delve into the South African market, and we also weigh up whether it's a good time to invest now, and we'll unpack some best practices to master successful property investment in new developments and how to evaluate the income streams, plus how to secure bank financing. We'll also learn a bit about the pros and cons of investing in real estate, the advantages, disadvantages in new developments. Saving on transfer costs is a big one. How to generate steady monthly income in a difficult market. And we'll dissect the potential for properties to appreciate in value. How to leverage your capital and make the most also of your tax deductions. On the flip side, we'll also address the challenges of the markets, cash flows with tenants, dealing with vacancies, maintenance costs, and that kind of stuff. So firstly, I would like to introduce our expert panelists for today, Marco and Miguel, better known as M&M. So firstly, Marco Gerasiunas is the founder and CEO of Blue Titan Investment Group, and they pride themselves in providing the highest quality and integrity in residential property. And Marco is dedicated to creating top-notch property developments and investments that accelerate wealth creation for individuals and institutions. So Marco, do you want to briefly introduce yourself and also greet the audience?
Thank you, Neil, and welcome everyone. Thank you, Neil, for hosting us. So yeah, my name is Marco Gerasiunas. I'm the CEO of Blue Titan Investment Group. Blue Titan Investment Group was founded on the premise of helping property developers, primarily to raise their finance. And through that process, we realized that there's an opportunity in the market to build better and a higher quality product at a lower price. And so that's basically the overview of Blue Titan. Myself, I come from a tech background, quite frankly. So it's strange to find somebody in the property space that comes from a technology background. But it was purely market opportunity that led me to this point.
Wonderful. Well, it's great having you on the show today, Marco. I look forward to your insights. And I mean, you're very experienced in this new development game. So, and we also got exciting times with new developments rolling out. Great to have you on the show. Our next panelist is Miguel Martins, and he is a former banker and property investor with over 25 years of experience. And I won't say which bank it is, just the red one. So he understands investor challenges, needs, and also where the market opportunities are. And he's also a residential property finance specialist with proven solutions. Miguel, do you want to introduce yourself and also greet the audience as well?
Thanks, Neil. Great to be here. And hi, everyone. Yeah, so spent the last good 25 years with Absa, with the last 7 years in home loans. Before that, I was in finance. So my background is numbers, finance, and just all sorts of banking elements. The last 7 years, I was able to marry my passion with my career, and I looked after the investor portfolio at Absa Home Loans. So products like the buy-to-let home loan, the future rental income was developed during my time there, and then also the structured lending product, Universal, was within my portfolio. And what that really gave me was the opportunity to spend a lot of time with investors as they need to get finance to build and grow their portfolios. I got to just interact with them a lot to understand where they were going, and being an investor myself was really talking to people who had the same passion and interest as I did. So a year ago, I decided to leave corporate. Now fully focused on a couple of different investment projects, growing up my own portfolio, trying different strategies. And what I enjoy doing is working with investors and still helping them obtain finance to grow their portfolios.
Wonderful. So Miguel, it's great to see you back on the other side again, on the investor side. And I mean, I'm really looking forward to tap into your experience, certainly from both an investor perspective, but also from a banker where you actually see the applications come in, and hopefully you can share some of those insights with us. But let's delve in. Let's get into today's topic. That's mastering, financing, and investing in new property developments in South Africa. And first of all, Marco, let's start off with you and maybe just share with us, what unique strategies or approaches are developers taking to differentiate themselves from their competitors? And are you also taking similar approaches yourself?
Yeah, Neil. So in reality, all developers want to create a product which addresses the market needs, the demand. Many have tried the cookie cutter approach, which does bring down costs significantly. But we found that creating a product which is superior in terms of quality and amenities, and which generates a higher return on investment, is the key. Every investor wants a great quality product, a good return on investment. In other words, they're looking for the lower price point than the competition or than what they can get elsewhere in the market. But they're also looking for excellent after-sales service. And it's kind of a fine line. Developers have also offered a guaranteed return model, which is around 6.5%. But we've taken this one step further, and we are offering a 9% net return guarantee to our investors.
Yeah, awesome. So look, we're going to unpack that a little bit more a little bit later, because I think it is such an important point, getting guaranteed income, especially in this time where we're seeing the market it's tough. It's a lot tougher than it has been, since COVID. We still got the aftermath of COVID. And so the incentives for investors is fantastic. And it's wonderful to be able to see that kind of guaranteed income you can offer is out there in the market. So thank you. Thank you for your start off there, Marco. Miguel, now I mentioned obviously you're an ex-banker and investor, which is you have not changed. So, and in the residential sector, and as I mentioned, you probably had to deal with a lot of applications, and you also see the investor's perspective from another angle, because I mean, I'm sure when you were at the bank, you were looking at from a investor perspective and that, the application. So the question I have to you before we get into and all the financing side of things is, how do you get new property developments approved by the banks? Because that's important for people like Marco as well.
No, absolutely. I mean, the property developers rely on the fact that banks are going to finance the final purchases. So it's a very important process, and there needs to be a very strong relationship and accountability between developer and bank. And what the bank does in that sense, you know, developer approaches the bank with an application, talks to what the project's about. There are the right certificates in place, NHBRC registrations, etc., that the bank ensures that are effectively that the development aligns to regulation and is compliant. But also one thing that the bank does, which actually is quite helpful for the end buyer, is that they ensure that the development, that the pricing of the apartments in a development or the properties in a development are actually market related. There's no point putting together a development where it's totally outpriced. The development won't sell, and everyone will really be wasting their time. And the bank won't be able to stand behind the development and support the financing if the bank doesn't believe that they can secure the lending with a property being purchased and being put up with security. So buyers in a development that have bank approval, and this goes across all banks, have a level of comfort that the banks have supported the due diligence to ensure that the development is built according to the right standards, and that the pricing is adequate for the area and for that type of development. And of course, as Mark, as you said, you get very different types of development. You get the cookie cutter developments where cost is very important. That's really your affordable housing and that end of the market. And then I think you get your other developments where I think where Blue Titan's playing in, and where the development has it looks different, it looks more modern, there's more style to it, etc. And that all plays into the value and ultimately the final sales price.
Okay, excellent. Okay, so nicely put. So
sorry, Neil, I just want to add something.
Please do.
We have found that the banks have got a set of parameters like Miguel was going through. And when you try and launch a new product, the banks are quite hesitant to try new things. They've kind of got a set of parameters that they want to work through. And if those set of parameters, if you fit into that box, they're happy to proceed with you. And that's obviously a challenge that we've had with the banks, trying to launch new types of products. And I'll give an example, one called Diamond Suites, where we try to launch lifestyle living for the poor at around 350 to 450,000 Rand a unit. And the banks were very hesitant simply because they're using that metric, that price point or that price per square meter for a unit. And they're saying, okay, hold on, this is in a poor area, but you're asking 25,000 Rand a square as an example, when the market demand is at 12,000 Rand a square. So we are finding that, there is a process that you have to go through with the banks to enter or to create new products and to enter new markets in that way.
Okay, excellent. So thanks for clarifying that. And so Marco, I think, when you're doing a new launch, as you are now in a market which we, it hasn't been an easy year for many developers and investors alike. I mean, and also, they haven't managed to get the finance and that kind of stuff. However, and we'll talk about that a little bit later when it's the right time to come into the market, because, I always say it's got to be contrary. But let's unpack your guaranteed income model, because, I mean, that sounds to me like a pretty good offer, and it's something which alerted me immediately. But can you clarify something in terms of, is this net return, and just unpack it a little bit more? How does it work?
Sure. So effectively, in today's markets, many investors aren't sure about how they get their tenants in. So what we've done is we've used a combination of methods. We've actually, the apartments that are on offer are actually let already. We have, in partnership with Nedbank, come up with a 24-month guarantee, which is slightly different to what the other developers are doing. You know, they're kind of using the proceeds of the sale to provide the guarantee. We've actually gone to the bank and said we want to provide an actual guarantee. So we then use this combination. So we provide the guarantee, and we use the combination of rent and Airbnb income to recover the guarantee that we've provided. So in this way, it never affects our investors. You know, the rental guarantee is secured. At the moment, you know, if you look at the average investment for our apartments, you're talking about 2 million Rand. That means a 15,000 Rand a month net return for our investors. When you take levies, et cetera, you're looking at about 19,000, 20,000. Now, when we first started renting our units out, we were finding they were at the 13,000 Rand mark. But as the product has matured, we're now achieving a 21,000 Rand return. But this risk lies solely on Blue Titan. And so for the investor, you know, this is a great way of saying, well, I'm getting a premium for the next 2 years, because we do feel that, you know, with the interest rates being where they are, it's a tough market for people to invest, you know, and many developers are feeling the pinch. You know, fortunately for us, this was our own stock that we were going to retain, and we've decided to launch this to the market in a manner that broadens Blue Titan's market reach.
Okay, excellent. Okay, so thanks for clarifying that. I think it's important to know. And so I saw Miguel licking his lips there when he heard that 9%. So, you know, he's wearing his investor hat there for a moment. So, and he's getting excited, which is pretty decent in this times right now. Because if we start looking at sort of rentals, a recent report, I think it was the TPN, it was a PayPop report. There's almost a 20% default rate across the board. I mean, we can sort of dissect that by area. In Western Cape is doing a lot better than Gauteng and KZN. So this kind of product to me is something which I think would definitely lean towards. And I'm not sort of scared. It's going to correct, and it's improving. The rental market is improving, and I think that's the point I want to make. But Miguel, I want to ask you, because interest rates play such an important, you know, factor in terms of when people buy, on confidence. And, you know, since COVID, we, you know, came down before, and obviously it shot back up again. And yeah, so there's been fluctuations, and so obviously it's had an effect on the current market feel and that kind of stuff. And, you know, I don't like to ask people for predictions, but I'm going to ask you for a prediction, and maybe, you know, with the next, you know, when we see the next Reserve Bank meeting, and, you know, what are they going to decide? Are they going to go interest rates on hold, which I have an opinion as well, and I'm sure you have too. You know, how does it look going forward? Because I think that's important. You know, so many investors are asking the question based on interest rates: should I hold back now and invest later, or should I jump in right now? And so what are your thoughts around that,
Yeah.
Miguel?
So you know, with the market as it is at the moment, not just on interest rates, but in general, right? You know, having a rental guarantee, you know, having some stability is so valuable. You know, the 9% I think is really interesting, but almost just the thought of that stable return is valuable in itself. So Neil, I know, well, I know exactly what's going to happen in 2 weeks' time when the EPC meets to discuss, right? So there are 5 members that sit around that table, right? 2 of them are going to say stay flat. Two of them are going to stay increase, and then the last one, well, you know, we'll see what he says, because it's up to him, right? So it's always 5, right? So you can't have it's an odd number, so that you can't have a dead split. Yeah, but let me. I've got a slide to share with you, if it's okay. Just
Excellent.
talk to you about where we've come.
Yeah.
Where we've come with interest rates, right? And it's always nice to just kind of see it as a picture. So, cool. Can you see that slide?
Yes, I can. That looks good.
All right.
Yeah.
So let me find it for myself, actually. Okay. So there we go. Great. So this is just a view. You know, if you go back right to 2002, kind of where we've come from, right? And some of the interest rates at prime, where, in 2002, we went right up to 17%. If you had a home loan then, that was extremely scary. Dropped right down to 10.5%, kind of happy there. Back up to 15.5%, hit the heights there in 2008 with the financial crisis. And then for the last 10 years, pre-COVID, we kind of sat, around 8 to 10%. And just pre-COVID, at the end of 2019, we were sitting at 10.25 at that point in time. COVID hit, demand dried up, and what does the Reserve Bank do, as all the Reserve Banks around the world did, is they drop interest rates, and we dropped right down to 7%. And they do that to stimulate interest, to stimulate the economy, not just to buy to buy property, but to create cash, to invest in businesses, buy assets, etc. That seems like a very long time ago. Mid 2021, we were sitting at 7%. Right now, where we are, we're at 11.75, and part of that was an overcorrection. Not an overcorrection. There was inflation that got ahead of itself due to the low interest rates. People just bought too much. It was also due to the reduced supply with China initially, and then with the Ukraine and the war in Ukraine, just driving up prices, food prices, oil prices, all sorts of things, and just general instability in the world. So currently we're sitting at 11.75. Generally, the feeling is that we've topped out. This is the top of the cycle, and really what we look forward to every month is the inflation rate that's released by Stats SA, and that inflation rate we're targeting 4.5%, so between 3 and 6% ideally. I think the last one, I stand to be correct, was sitting at 4.8%. I stand to be correct on that one. But so we're kind of hitting the mid target, and if we're hitting the mid target, it means that we're either going to remain where we are with interest rates, or the Reserve Bank is going to be comfortable to start dropping those off. So, but really, what it does ring out is that, or what the messaging is that we have hit the top. People are really feeling the pressure with interest rates, but it is going to get better. So if you've been able to get through the pain, it's going to get better. The question is when. And what I can share with you is I went and looked at what the Reserve Bank forecast with regards interest rates, and they put out a forecast because people need to plan. Companies and corporates and other countries who we invest with South Africa need to plan. And the Reserve Bank is roughly looking at 11.75 reducing to 11% by the end of next year, and then down to 10.75 in 2025. What's interesting though is that the reduction next year is probably going to happen commencing middle of the year. So we still got another 8 months of current interest rate levels. If we take a forecast, it will reduce quite quickly in the second half of the year, but then it'll stop off, or it'll bottom out at 10.75, which is higher than the 10% that we were pre-COVID. And I was at an event earlier this week, and I asked an economist, why is that? And really, if you look at the UK, the US, the interest rates are much higher than they were. The whole world is a lot more expensive place than it was pre-COVID, and this is obviously has an impact on us. But what this really helps us to, where it really works with the development that Marco is busy with, and with other developers, is that if we know we're at the top, and we're gonna start reducing shortly, it means that house financing is going to get cheaper. If you can afford it now, it's just going to get better for you. If again, it's a forecast, it's going to get better for you within the next eight months or so. It's still tough going because a lot of consumers, a lot of buyers have been burnt by the high interest rates and able to do work of other debts potentially. So the market is still not a very healthy market, but it definitely is going to improve. But what this also does, what the high interest rates and the tough market have also brought, is a lot more people who are renting or haven't gone into home ownership. They've continued to be renters. They're either concerned about the instability of interest rates and the risk that taking on such a massive debt like a home loan does or is. So those renters stay in the market. And then unfortunately, some previous homeowners become renters. So the rental market, although not extremely healthy, is healthier than it's been for a very long time. That 20% default rate, and as you said, you can really have a whole discussion around that. That is normal. That's where we were pre-COVID, sitting at around that at around those levels. It comes down to how well you manage your tenants and how well you qualify them, etc. So the rental market is looking as healthy as it has been for a very long time, and these high interest rates actually support that. Unfortunately, double-edged sword. It supports on the one side, but it is painful on the other side. I'll stop sharing.
Awesome. No, that's great. I think, Miguel, there was some really great insights there because, what I noticed that you omitted there was 98. If you had to go to 97, 98, I mean, the interest rates were at I think it was 25.5%.
25%, yes.
Yeah. I mean, even though it was only for a month or two, it was quite a big skrik for all of us in the market. So, yeah.
I think those scars are still there for many people.
No, absolutely. Okay, great. I think that was very nicely presented there. So, and I'm going to come back to you just now, Miguel, because what you've just told us now is that if you can, it's time to climb into the market. And I think you.
So I spent the evening with some ex-colleagues earlier this week, and what they see is that yes, the market has slowed down. In terms of buyers out there, it's slowed down significantly, and we'll see these in the Lightstone reports and those market reports. But the banks are still very eager to finance. If you're a good quality applicant, if you've got the affordability, you manage to look after your credit score, and if you're purchasing a good quality property, a property that has the value, that getting finance, you will have the banks fighting to finance you. So the banks, although do take maybe 2 looks at an application than maybe they did before 2 years ago, they are still very open to financing good quality applicants.
Wonderful. And we're going to unpack those 2 looks a little bit later. So I would really like to understand that a bit more. But Mark, I want to get to you because I think Miguel's actually demonstrated very nicely what's going on with interest rates, which in the current market. And I think you also shared now with this rental guarantee that you're offering out there. So maybe just tell us, I mean, this is why you're providing the product. I mean, what is stopping investors from purchasing properties in today's markets? And I mean, obviously, Miguel has touched on it. You've also touched on it, but maybe just, add to that conversation.
Yeah, it's a great question. I think in today's markets, investors aren't always certain about securing their tenants or managing their tenants. That fear of vacancy is a significant concern, especially after COVID. I mean, during COVID, we gave, I think, virtually all our tenants a 6-month holiday. And especially when that means you're covering levies, rates, bond costs, all out of your own pocket. So that's why we launched this guaranteed rental income. COVID helped us actually as an organization. It taught us how to manage our tenants effectively. And a lot of those methods have been put into our lease agreements with our tenants. So that's how we are able to offer this guaranteed rental income, because we're able to manage our tenants. Obviously, we pre-vet them, very strict about that. But we're trying to take that concern for our investors away. And that's why we're able to guarantee the income for 24 months, giving them that peace of mind. After the 24 months, we also then enter discussions. We have an option for owners to renew their lease with us, because effectively it's a lease from Blue Titan. But by that point, we feel that the market will have turned significantly, and that includes property prices. That's why we've only launched a select number of units to the market for this guaranteed rental income.
Okay, awesome. That's wonderful. Great opportunity. And we will be talking a little bit more about that a bit later. Miguel, I want to come back to your two looks. So maybe give us some insights and some best practice for investors who want to apply and secure bank finance on a new residential development, such as Marco's, for example, Paramount, which is launching this weekend. What are the do's and don'ts? And maybe you can cover bases for both first-time home buyers and obviously the more experienced investor approach that owns a couple of properties already.
Yeah. So purely from a bank financing perspective, the bank effectively looks at three things. One is, can you afford it? So you know, and there are some rule of thumb kind of principles around that. But at the end of the day, if you look at your income and you deduct your day-to-day expenses, you know, can you afford the loan, the monthly loan payments that you're taking out? So I said it starts there. Secondly, you know, your credit score. Credit score, the banks look at that. The credit score tells the banks how well have you manage your commitments on other loan payments. And if you might have the affordability, but if you have missed a payment on a loan to another bank, or there's sometimes even your Vodacom accounts and things like that, the banks all of a sudden get very sticky. You know, a Vodacom account doesn't compare to a 1.5 or 2 million rand home loan, but it still starts talking to a behavior, and the credit scores really talks to the behavior of an applicant being able to manage their commitments. And then lastly, security. So you'll be taking a loan for, let's call it 1.5 million. Does the property serve as good security for the loan being taken over? In the worst case scenario where a bank might come and have to repossess that property, in the worst case scenario, will the property serve to pay off the outstanding debt? And that's what the security is. And often have investors come to me where they might be buying a property where there's great rental returns, student accommodation, multi-lets, you know, all these kind of really interesting properties where there's significant rentals. But the actual property itself, as a residential property, not a commercial property, as a residential property, when you look at the average market value, it's probably going for a lot less than the value it creates. And the banks will struggle to find value in that property as security, and in some cases will ask for a higher deposit. So it really does come down to those three things. And of course, in each one of those, various nuances. First-time investor, for first-time buyer or first-time investor, you don't have a home loan. Banks are even offering up to 105%, where they do the extra 5%, they provide the extra 5% financing to cover transfer fees. And it doesn't apply to new builds, but where someone's purchasing an existing property, and there are those transfer fees, that 5% will go towards it. So the banks are really doing a lot to support to continue to support the market. As an investor, the buy-to-let market is still, the buy-to-let products are still out there. The majority of the banks will accept existing leases that the applicant might have. They'll also look at leases that already reside in the property. So if you're buying a property that's already rented out to a tenant, the bank will take on that lease. Different banks accept different portions of the lease. Absa and Standard Bank will take up to 100% of the rental income. FNB a little bit less, and their bank a little bit less than that. But the banks will take anything from 50-60% up to 100% of the rentals. And then of course, whilst looking at rentals, Absa have the future rental income product. And what that does is that if you're already an existing property owner, they will take on the income that you expect to earn from a property that you're purchasing, even if it doesn't have an existing lease. They'll look at the market, they'll pull TPN's reports, that look at the average rentals being achieved in the area, and they'll add that to your affordability. And that just really helps where someone, an investor, is hitting that hurdle, not able to just get over that, and that future rental income will help them cross that and secure the financing.
Wonderful. That's great. I think you've elaborated quite a lot. So we know that credit score is important. Bad credit, 1 look. Good credit score, 2 looks, maybe 3, 4. Okay, we're going to get through to the line over here. So really good. Just from an investor perspective, specifically an investor that owns probably multiple properties, is the bank requiring some kind of collateral? I mean, obviously there's surety and that kind of stuff, but are they looking at other properties maybe as collateral? Is that something that they look at, or is it not something, or is it kind of reliant on income?
So when it comes to commercial finance, I think those banks will look at applicants' balance sheet and bring in other forms of assets, etc. As you mentioned, home loans is fairly simple, and this is, Marco, you spoke about our home loans banks have certain levels of criteria, and you got to fit within that. And sometimes it's frustrating because it's a square peg round hole kind of scenario, but actually that does work in our favor. So when it comes to financing, it's the bank looks at the property being financed. In some cases, we've had parents who've been willing to stand surety for their kids who are buying their first property. If that parent has not got it, that does not have ownership of that property, the banks will not take that as surety. So they'll look at the individuals who have ownership in that property or have a stake in the PTY or a trustee, if you're purchasing like that, and they'll look at looking at affordability and surety from those and from that particular property. When it's on the edge, when the decision sits on the cusp of approval / decline, they will look at the investor's portfolio. They will look at, do they have other lending with the bank, other home loans with the bank, or do they know what they're doing? I've had investors who've come and bought 3 little apartments in one go, and was their first purchase ever. And the bank actually declined, not because they didn't have the affordability, but because they weren't comfortable that the investor was able to all of a sudden manage 3 different properties, 3 different tenants, and it was their first deal ever. So the banks do look beyond what's on the paper, and they look at the investor, especially when the decision, the approval decision is sitting on the line.
Excellent. I think nicely put there, Miguel. I think there's some really good insights and really good advice, I think, for anybody who's looking at getting bank finance there. So Marco, maybe you can tell us from your perspective, I mean, what are you seeing as the future of property development, and what other opportunities are you seeing in that sector? Because you're bringing in a nice innovative product here, income, for 2 years. So maybe you can just share us, what are you seeing as in the future of property and new property developments in particular?
So what we are seeing, so we get approached regularly with clients who have a piece of land that they'd like to develop or that they'd like to offload. So what we're finding is that the cost of building has gone up exponentially since COVID. Steel price, you're talking close to 100% increase in the last 2 years. So the reality is that new developments are going to cost more. So developers are being put in a situation where they either have to increase the price, which means that, depending on the bank's conditions and the market demand for that area, it's not possible to sell it for that price. So I think we're going to see less stock coming onto the market, less new builds coming onto the market, and the new builds that do come onto the market, which will be a lot larger in scale. So, you'll either have your smaller developers that'll do 5 to 20 units, or you'll see really, really large in the hundreds of units, because the economy of scale brings down the cost and it enables you to sell the units. The challenge with that is that obviously, if you release, as we've seen with some of the big developers in the market, you release too much stock to the market, you're sitting with a problem. You're not able to sell that stock. So it's about finding that fine line. The market is the property development market, and especially the sales end of it, is ripe for disruption. Nobody has really disrupted this market worldwide, for that matter. And I think, well, we're actively working in that space to try and disrupt that market, to create new innovative ways to identify demand, identify potential clients, and make it easier for them to purchase units. And this rental guarantee is just one step in that process.
Wonderful. And I think that's what we need in this market now. We definitely need disruptors. We need people to come in here and change the game. And it's always market conditions that tend to force our hands at sometimes in doing that. But we're going to be talking about your product also a little bit later, Marco, because you've got a big launch this weekend, and which you'll share with the audience as well. I want to invite the audience, please, you're in the Q&A box. I know some of you put your questions in the general box below. So if you could just put it in the Q&A box, any question that you might have, please fire away. There's no such thing as a silly question. So please give us your questions in there. I think we're having a great debate here. There's some really great insights that have come out here, both from Marco and Miguel. M&M, they're really sharing their best info here with you today. So Miguel, I want to come back to you wearing your investor hat now. So, and you playing in the market, and you've been playing in the market quite a while, and you've built an impressive portfolio, even as a banker. So, which now you're not. You're now an entrepreneur. You've broken away from the big corporate world, and you're an investor in the wild world of real estate investing. So, maybe just tell us a little bit about your experiences where you've seen opportunities in general, and what kind of trends and what kind of things you would be looking at from an investor perspective.
Sure. I think there's so much happening at the moment. There's so many trends happening in the market at the same time. It's difficult to find any one thing. So maybe a couple of comments. I think the market goes in cycles, and we tend to think that where we are today, is unique, and there are a unique set of circumstances, but markets do turn. The external market, the international market, which has had probably a decade and a half of stability, is in flux, stabilizing, but we're still all over the place, and that affects us. We are the tail end of that. Of course, there are other factors as well. But there are cycles, and cycles do come and go, and we're in the middle of one at the moment. So I think recognizing that there are these big trends, but then also these opportunities that present themselves to us on a daily basis. It comes down to doing the numbers, not just how much you can afford, but does the project or the property that you're looking at as an investment, does it lend itself to your strategy? Are you looking at a rental income type strategy? Does it give you the net income that you're looking for, and to employ the cash resources that you're going to apply to that purchase? Or is it a capital or equity growth type strategy, where you're buying a property where maybe the cash flows are maybe under pressure, but the expected increase in rental returns will offset that, and that's where the benefits are. We tend to, in this space, and just now we spoke about interest rates, we tend to talk about property in terms of trends and momentum, and house prices are only increasing. So I'm going to use the example early on, 20% default rate. That is a market average. Now, if you go and speak to any decent property manager, property owner, who's got a couple of properties, who skill themselves in leases and managing tenants effectively, etc., whether they have 5 or 10, or whether they're managing a portfolio of 1,000, they will tell you that their default rate is probably sitting less than 3%. And that's because it comes down to the unique portfolio, to where you invest, to how you manage it, to the skills applied, etc. So to run away from a market, or to invest in a market based on the big picture, is immediately a concern. You've got to look at the investment that's in front of you. You've got to look at the skills that you have as an investor, and the people that you pull around you to bring that investment to fruition.
Okay, wonderful. I think nicely put there, Miguel. And I think, when you said, it's also about the numbers. I think you played into Marco's hands there, because Marco's launching a new development this weekend, Paramount in Houghton. And I think, you've mentioned being a disruptor, Marco, and then bringing something different to the market that's not always out there. And I mean, this income guarantee that you're offering investors for 24 months, I think could definitely be a game changer. I mean, so maybe just tell us a little bit more. How does that work? Tell us about your development. Tell us about this game changing thing. And I think you also would, the audience that's based in Johannesburg, there's an invitation as well that Marco would like to invite you over as well. But maybe tell us about this game changing thing. Because I mean, Miguel said it. It's about the numbers, and you giving a solution. Yeah,
absolutely. So most of our tenants and owners are professionals. They're doctors, they're lawyers. Houghton, the property is located on Oxford Road in Houghton Estate, and so it's quite central to the hospitals like Baragwanath, Joburg CBD. It's central. It's 5 minutes away from Sandton. There's a lot of banks around us. Coca-Cola's there. You've got a lot of corporates around us. And what that's done is it's given us the ability to provide this offer to the market because of the quality of our tenants. I don't know if we have at the Paramount done anything that is game changing yet. The offer is game changing. If you look at the amenities we have, we've catered for all the amenities that you would expect to find in a really large development. But with this being a smaller development, we've managed to, we do provide a fitness center, hotel services, concierge services, a business center. It's facial recognition security. There's backup water, there's backup electricity, 24/7 security, and above ground basement parking. So it's designed, the Paramount is designed for the professional. It's designed for comfort, luxury, and convenience. Interestingly enough, I was at the site yesterday, and Brent, who Miguel keeps calling me, was occupied. So two potential clients came in, and it was a couple. And they asked to go and see our 3-bed units, which we have only a couple left. And so I took them to the units, and it's a couple with 5 children. And my advice to them was, this is not the right property for you. This is not designed for families. Yes, we have got families in there, but they've got 1 or 2 children, 5 children in an apartment. I said, I would rather look at something which is maybe a refurb, something that you can grow into, but you can't grow into this. And so, the product is designed for the professional. We've catered for all the amenities. We've got a few extra things like facial recognition in the gym, which you wouldn't typically find in these kind of apartment blocks. The interesting thing is, looking at the tech side, all the metering and the levy management is all done through an app. So it's all done through a single app. You as an owner can look at your consumption or your tenant's consumption. All of that's managed automatically for you. So you're not having to go and say, oh, you know what, you haven't paid your electricity, etc., etc. All that's done. All of that is automated. And this is where we're starting to bring in the technology. The game-changing stuff, I think we'll chat in a year or so, and you watch this space is all I can say.
Excellent. Great. And I know you've got an invitation, which you're going to extend a little bit later to our Johannesburg-based audience here. So on Saturday at 12 o'clock, there's a launch. I don't know if you want to quickly just touch on that now. I know there's some questions, or we could do that at the end, but you could maybe just tell them it is on Saturday. And maybe, do you want to just give that quick little, and I know you've got a slide, which you can invite everybody and show it up at the end. So maybe you just want to quickly just tell while we're on the subject.
Okay. So yes, the launch is on, and I'm going to do this wrong, so I apologize, but I'm going to do it anyway, and you're going to moan at me later. The launch is
all good, all good. We can see it.
okay, so the launch is this Saturday, 11th of November from 12 o'clock. It's at the Paramount, which is number 38th Street, Houghton Estate, Joburg. For the people who want to know more information that can't attend the event, they can obviously go to our website, theparamount.co.za, or they can WhatsApp us on 072-686-9091. So we're quite excited about this. We haven't the guaranteed rental. If you try and purchase a guaranteed rental apartment from us now, it's not available. They're actually only being launched to the market at 12 o'clock on Saturday. You're also able to buy the apartments directly off our website, or you can visit us on site. So as you can see, we're testing the water with the tech, and I think, for a lot of people that aren't able to make it, they can go onto our website and purchase an apartment directly off that.
Wonderful. Great stuff. Thanks very much for that, Marco. Could I just ask you just to close down your stop share, if you don't mind? Thank you very much. And once again, I just want to echo what Marco says. Please go around to that development. I understand it's also you there on Sunday as well, Marco. Is that right? You there both Saturday and Sunday. So you will have people on site.
Absolutely. So we've got people on site all of next week, from Saturday all the way through to next weekend.
Okay, wonderful. Excellent. Just want to clarify that. Okay, let's get to the Q&A, and it actually some very interesting questions. And for those of you who do have questions, please fire away. First one was from Sebastian, and I think it's both for you, Miguel, and also Marco, which you can both answer. Many developments include rental guarantees to aid sales, but bank brevels seem to exclude this. Has this policy changed? And I think it's more of a banking question first and foremost, but I think certainly Marco's product seems to be quite a different one that we've seen in the past, certainly from a return basis. Your thoughts on that, Miguel?
Yeah, so the challenge with that is that the bank will struggle to, well, as opposed to a normal tenant, having a rental guarantee in place can become difficult if the rental guarantee fails, etc. And the banks, and possibly to Marco's comments earlier on about innovation, banks tend to take a step back from anything that is too different or can't be easily managed. But what the banks will do is they'll still finance the property. They just won't take the rental guarantee into consideration for affordability purposes. In most cases, and I don't know if that's the case with the Paramount. So nothing stopping an investor purchasing a property that has a rental guarantee. They just won't be able to utilize that rental guarantee as part of their affordability.
Yes, maybe. Yeah. So to add to that, Miguel's absolutely right. The banks look at your current financial position, not your future financial position, not the rent that you may be earning in a month or two's time. So what we've done in partnership with Nedbank is they do provide a physical guarantee. There's a small fee that applies. I think it's just over 1% that they ask for. And then that physical guarantee can be used to supplement the income, because then it's an actual guarantee. It's not just a developer saying, yeah, we promise we'll pay you. This is an actual physical guarantee. And that's what we've done in conjunction with Nedbank, where we physically have taken money from Nedbank, borrowed money from Nedbank, and that's how we're providing that guarantee to our buyers. And they can use that to supplement their income in that case. But again, the bank will, the bank assesses it on a holistic perspective, not just your income. They look at your credit rating, they look at all those things, but obviously the guarantee does bump that up.
Okay, great. Excellent. Okay, thanks for clarifying that, Mark. I think it's an important point there. And Sebastian, for your question, really good. And we've got another one from Chris. Chris says, thanks for the great webinar. Pleasure, Chris. Join us every week. We've got webinars going. of this kind, educational, and that's what our whole job is, to educate you, the investor out there, and to bring wonderful people like Marco and Miguel to you and put them in front of you so you can learn from them and obviously get investment opportunities, because also it's about taking action. So Chris says, on your own developments, what has worked well for you on a good split on selling of units and hold stock in Cape Town in the 2 to 3 million rand range properties? I don't know who wants to have. Do you want to have a crack there, Marco?
I'll give it a crack. So you know, with us, we tend to look at our future book. So we have a look at what projects we've got on the horizon, and that determines really what we need to sell now. You know, what is the good mix? You know, the good mix typically is to retain a portion of your profits in units. So if you've got 10 units and your profits are 1 unit, then try and retain that unit. The reality is, once a development is matured, and I say matured, you're talking 2 years post the development, you'll find that the prices during those 2 years have significantly gone up. You know, so after that period, you're able to make a large premium on those units, far higher than you'll make in profit on a new development. So if you're able to retain more than just your profit units, maybe 20, 30%, then that's the way to go. Because after that 2 or 3 year period, I wouldn't go over 3 years, but definitely after 2 years, you'll find that there's a significant premium. And the kind of premiums we're talking about that we've seen is on the stock that we've held. You know, we're talking 30% to 70% premium on that product.
Okay, great. Thanks for clarifying that. That's a very good point there, Marco. Gentlemen, I cannot believe we're close to the bewitching hour already. So what I'm going to ask you to do is to give your final wrap, your parting shots. And we're going to start off with you, Miguel. And Marco, we'll give you the last say, and obviously extend the invitation through to our guests here today, to our audience. So Miguel, maybe just give us your parting shots, maybe leave our audience with something that they can take away and say, hey, you know, that's something I could do right now.
Sure. No, great. So it's been great to be on this on the webinar and have this discussion. It's always a privilege to share. I think knowledge that you know, we might take for granted, and that just becomes helpful for others. So maybe a parting comment is, and then an offer maybe, is that you know, I think the media, you know, petrol goes through the roof, or petrol goes up by R1, and all of a sudden, you know, there goes inflation. Inflation pops up by 0.1%, and all of a sudden interest rates are gonna increase, etc. Media are there to sell papers and to get clicks. You know, they're all around us. It's difficult to ignore them. But when it comes down to making decisions, especially long-range decisions on interest rates and where the market's going, etc., look for where the content is. Look for the data, and where the data is, or where the content is, and sitting and listening to specialists and on webinars such as this, whether it's going in and actually, you know, making a point to listen to the MPC, the Reserve Bank, and what they actually have to say, where they see the market going. You know, looking for reports from TPN, from PayProp. Those two organizations put out great reports in terms of what's happening in the rental market, etc. So seek out that data, seek out real practical content when making decisions, and look to the numbers. I spend a lot of time in my past as a banker. I spent a lot of time working with investors to help them get the financing, to help them package their applications in such a way that, and if they had to come back later, they'd come back later with corrected affordability or improved credit bureau scores, and I would help them ultimately, you know, begin and grow their portfolios. I still do that, and that's my offer. Is, you know, happy to put myself out there. I still do have investors come out to me. I really enjoy the conversations. You know, it's always great to see the strategies that investors are busy with, and we still do sit down and see, you know, what investors are doing, how are they getting finance, and what's the best way to go forward. So that's something I enjoy very much, and look forward to doing more of that. And Neil, thank you for having me on, and Marco, great to
Absolute
have had the
pleasure.
conversation.
Wonderful. Miguel Martins, ex-banker and investor. It was absolutely wonderful having you on today's event. But don't disappear, everybody. We've got Marco. You got the final word, Marco.
Wow, thank you. Thank you, Neil, for hosting us.
Absolute
You know,
pleasure.
I think for most investors, when they're looking to invest in a property, I think there are a couple of aspects that they need to consider: the location, the quality, and the income it'll generate. You know, and it doesn't matter where you buy property. If you're looking at those three fundamental things, I think you're in to make a good return. Again, I would love to extend the invite, which I am technology savvy, but not with Zoom, it seems. I am very excited to welcome anybody who would like to join us on Saturday. I'll be there as well as my team. There is free champagne. Not that that should be a motivating factor, but I would love to host you. I'd love to host you there.
Wonderful. Great stuff. So thank you very much once again, Marco Gerozunas, the CEO and founder of Blue Titan Investment Group. Thank you very much. Can you just close your thing? I just want to give the last parting shot there over there. And,
just one thing. Just one thing. Thank you, Miguel. It was great.
Yes.
Discussing these points with you.
No, it was wonderful.
Thank you.
So Marco Gerozunas and Miguel Martins, M&M, thank you. It's been wonderful sharing your valuable insights and your expertise, your knowledge, and I think it's really been eye-opening today, really. To our audience, we appreciate your active participation and engagement. Just note, there's if you look just on my left or right-hand side, you'll see read the latest edition of Real Estate Investor magazine. You just go to the rei.co.za website and you'll notice a familiar face there about Blue Titan. You can read more about it there, about them and their new developments and their previous developments and their company. So please read the Real Estate Investor. It's rei.co.za. It's free to you. Please access it online. And it's a great read. You'll get some great insights. I encourage you to go there. So before we close, I want to remind our audience of our next webinars, when we have 3 webinars in the following week. First of all, there's a live one in Cape Town, and believe it or not, our guest will also be Miguel, and we're going to be, that's Tuesday the 21st of November, and I think if I can ask Ashik just to drop the link there into the box, it would be great. And we're going to be unpacking the residential distress property market and the era of new real estate investing. And then there's also going to be a webinar that's only in Cape Town live, or it's virtual. So you have an option of virtual and going live. Then on Wednesday, the 22nd of November, investing in Malta real estate. That's more offshore. We delve into Malta property market and look at unique opportunities for investors. And sometimes there are investors, yes, they want to look at offshore, but we know that South Africa is still a great place to invest, guys. So I'm still pro-South African all the way. And then, of course, Thursday, the 23rd of November at 12 o'clock, how to maximize profits with FICA-compliant residential rental and student accommodation property investment. If you want to book, it's all for free, people. Please join us. To register, you just visit the rei.co.za website. You register on the events navigation tab. You click on upcoming events, and you select the event that you want to attend and register. It's wonderful having you all. And once again, I must express my heartfelt gratitude to Blue Titan Investment Group, Marco Gerozunas, CEO, and of course, Miguel Martins, for sharing your knowledge and your insights and being an integral part of today's knowledge sharing today. So wonderful. Thank you again. It's fantastic. Our audience, I encourage you, if you want to reach out, there are many ways you can do that. You can either go directly through to the Paramount website, as Marco has suggested, or you can just drop us an email at info. You can go to our website. There's multiple ways. You can send us a WhatsApp line. There's really multiple ways, or you can just drop something in the inbox if you want to and say, please call us. But please go along and see the Paramount over the weekend at 12 o'clock. It's in Houghton, and welcome you all there. So Until we reconvene for our next webinar, which is on Tuesday, the 21st of November at 7 p.m. This is Neil Peterson along with Marco and Miguel. And we're signing off with these parting words. Stay safe, and may all your real estate investments bring you boundless success and wealth. Thank you all. It's wonderful having you all again today. Thank you.